Hi, this is James Zane with Old Capital, and I've got Rowan Burch here to talk about a new deal. Rowan,
Hey
what's
James,
going on, man?
just hanging in there,
Hanging in there.
No, it's all good. We're pretty busy right now, so things are good.
So I think maybe to kick it off, give people a little bit of your background and then what you're seeing in today's market right now.
Yeah. Rowan Burch, managing director with Rowan Multifamily Advisors. I've been in the multifamily brokerage business for about 10 years now. Um, what we're seeing right now, obviously, the market slowed down significantly with the changes in the lending environments, rates going up. We've seen a little bit of a cool down in the Treasury, pushing up here in the last couple of days, which is definitely given some hope to some folks out there that are going agency. But overall, I think we're still seeing deals get done. Definitely at a slower pace. I think most of the deals we're seeing get done right now are lower leverage agency loans and agency executions. Um, not a lot of product on the market. I think we're also seeing just a little bit of a flight to quality. So I think people that used to buy 60s, 70s are pushing up towards the 80s a little bit more. But I think beginning of next year, we will see a push of inventory onto the market and things will pick back up again.
Yeah, I mean, it's funny. Everybody, it used to be everyone missed like the 2% 10-year treasury, and then it went to 3%. Everyone forgot about three, and now we're seeing like it come down from 4.30 to 4%. We're like, oh man, it's this is as low as it's gonna ever get.
Oh
So
yeah.
people go worst case scenario right away. So yeah, there's a lot of things in this business. One of them is timing, and so you just have to underwrite it with a little bit more caution. So but speaking about deals, so we're going to talk about a deal over in Fort Worth, 60 units, Crest River District. So let's pull up a map, sort of give people an idea of where this deal sits for people who haven't been out to sort of that Fort Worth area.
Yeah. So the Crested River District, one of the most unique things about the deal is its location. So it's about 10 minutes from downtown Fort Worth, just west. So it's on a road called White Settlement Road that runs right into downtown. The property kind of, and we'll get to this a little bit later, but the micro location of the property kind of sits in this new entertainment, live, play, work district called the River District. So there's this bend in the West Fork of the Trinity River, as you see here, that kind of goes down and makes a little horseshoe. And that whole area is being, a really big target for redevelopment for multifamily, for office developers. There's some retail development going on. So a lot of this has occurred over the last 4 to 5 years. And there's still projects that are coming out of the ground, planned, getting through zoning. So it's a very, very unique area. Crest is kind of up here at the top of our screen in the kind of in the orange block there. It's the only property that wasn't built in the last 5 years in this submarket. So you got, the only somewhat affordable community in the area, surrounded by new construction. You know, there's there's going to be demand for a little bit of a more affordable, um, living space in this area. So unique property, interesting location. You've got a new construction property just to the south, and then you've got a big mixed use development that includes multifamily to the west. And so, you've got two really good neighbors that are doing a lot of marketing as they're going through lease up, which drives traffic to the area. So I really like the area that Crest is in.
And you've got some, so everybody is always asking, can I find a B deal in sort of an A location, right? So most people don't want a B deal in a C location, but a B deal in an A location, like surrounded by Class A and townhomes and new development. And so here you go, here's your B deal. And obviously the A rents, and we'll talk about the A rents in relation to the B rents, but I guess for people who, let's zoom out a little bit and talk about overall Fort Worth. I mean, what do you think some of the drivers are for Fort Worth, for somebody who maybe has been on the Dallas side for a little while?
Yeah, definitely. So Fort Worth, obviously has its own standalone economy. I mean, you've got TCU, which is a little bit to the south of this property. You've got downtown Fort Worth, which is which is a relatively large MSA, just 10 minutes to the east. And then you've got Lockheed Martin, which is just to the west of the property. large Air Force base, and also, big job driver for that that western part of the Fort Worth metroplex. So, it's within Fort Worth. This is a very accessible location to most of the big employment drivers, entertainment drivers. West Seventh is probably the biggest entertainment district in Fort Worth. We're about 5 minutes from there, driving wise. So you've just got a really central location surrounded by good, high-paying jobs. And I mean, it is really kind of a live, work, play area, which is not very common in some of these more suburban areas. So,
Right. All right. All right. Let's jump into this deal specifically. So it's called Crest River District.
mhm.
Talk about sort of the exterior, and then we'll jump into the interior of the property.
Yeah. So the property was purchased 2 years ago, back in December of 2020. The previous owner was a long, I think it was 25-year ownership, owner managed property. The current ownership group came in, did a pretty hefty repositioning of the exterior and the interiors. So they spent about a little bit under $500,000 on interiors and exteriors on this property. They did siding, paint, solar screens, parking lot work, landscaping project, new signage. They transformed the what was a maintenance office into the leasing office, and then they made additional unit rentable again. So it's truly a 60-unit property with its own leasing office on top of that. So I mean, they've done a lot of work to the exterior. Really, the opportunity here comes on the interiors. We'll get to that in just a minute, but I think there's a lot of potential here with the upgrades that they've done and kind of proven up a value add story, but also the location, and it's just going to continue to get better as more of these developments come to fruition.
And so you guys did not paint this Class B property white yet. So I guess there's always there's always room for that
Yeah,
on this
yeah,
exterior. But it looks like it's in pretty good shape just with the exterior done. And so I guess, is this the leasing office here in this
it
picture?
is. Yes,
Okay, so this is the
exactly.
leasing office right here. Okay, so it has a leasing office, new signage. And then we'll talk, I guess, in terms of property management, 60 units. How do you manage? How would you recommend someone manage this property? With
Yeah,
yeah.
yeah. I think this is just big enough to have a full time one in one out staff. I mean, we've got a leasing office. It's very it's kind of tight, but it's very cozy. I mean, there's enough space for an office and a little coffee bar. So they have one person on site, which is kind of the leasing manager, and then it's overseen by a regional manager that works on some properties in the nearby area, and then they have one full-time maintenance. So I believe a lot of management companies we're seeing come into this smaller space would be open to managing something like this. Originally that was one of the biggest hurdles to overcome with this deal, from what I understand. But now things are going very smoothly. They've got all their systems in place, and I think it would be fairly easy for a new owner to come in and just continue what they've done from a management perspective.
Okay, and then how many units have been sort of quote unquote upgraded? And then what
Yep.
what does an upgrade look like? Are we looking at upgraded unit here just with the countertops and flooring and appliances?
Yeah, so this is going to be the premium level finish out. There are 9 units that have this premium level finish out. Um, there's also a standard upgrade. 49 of the units have been upgraded in some way. 9 are going to look like this. Of those 49, the other 40 are going to be a little bit more of a standard upgrade. They're not going to have the cabinet fronts. They're not going to have the stainless steel appliances. Instead, they'll have black appliances and flat face fronts. But really, those are the only differences between the premium and the standard upgrade. The premium level upgrades getting about $140 premium across those 9 units that have been done. So the business plan from the interiors perspective is coming in, taking all the units from that standard upgrade up to the premium as they turn, which should not be a super expensive change. It'll be about a $2,000 upgrade to get from standard to premium, and then to take the remaining 11 classic units from those long-term tenants, and as they move out, bring them up to the premium upgrade as well.
All right. What do you think to take it from classic to premium? Do you have a rough estimate on sort of what Is it 10,000? Is it 15,000? What do you think on this size?
Yeah, so these are smaller units. So you've got a little bit less flooring that you're going to have to do, a little bit less paint. Countertop space is a little bit lower. They're smaller as well. So this is costing about $7,500 to go from a classic to a premium level finish out, and to go from a classic to a standard is going to be right about $5,000. So that's the cost breakdown.
All right. So we got the CapEx here on the side. Big stuff, clubhouse, exterior paint, landscaping, and an interior that you guys have done. I guess overall, talk about, it looks from the pictures, 1980s sort of pitch roof, individual HVAC, individual water heater. Is that right?
Yes.
Okay.
Yes. Individual water heaters. They do not have washer dryer connections. There is space, and so they have a water heater closet in every unit that's elevated. And so the original thought process was to go in and put in the all-in-one Euro style washer dryer units in those closets. It's just not something that the current owner, got into or was able to carry out on their business plan. They just went with upgrading units and were able to get their pro forma rents by doing that. So I think on top of those upgrades, putting in washer dryers would be a big benefit to the tenants. It does have individual hot water heaters. So the third thing would be covered, or not covered, but reserve parking. They've started doing reserve parking last month. And they've seen a really good turnout on that. I think they're at about 12 to 13 spaces leased at this point for $30 a month. And so, in our pro forma, we underwrote for a new owner continuing that program, and we assumed that about half of the units, so about 30 spaces, will be rented out at that $30 per month.
Explain you said the washer and dryer, so it doesn't have washer dryer connections, but
Correct.
If you, I guess you added a connection, and then were you thinking of, you said all in one washer and dryer?
Yes.
Okay.
Yes.
Is there a company that does that? I haven't seen it, but is
Yes.
it just because of
There
the
is.
size?
So
Just because of
yeah,
the size of
it's
the
because
space?
of the
Okay.
size. It's
Okay.
because of the size. So you're restricted a little bit by the size of these closets.
Right.
And so, on a lot of other smaller properties, one in Fort Worth, we sold actually beginning of this year. They had implemented those, and they were really well received by the tenants. They were really easily installed. Really, all you need is electrical run to the area that you want to add the connection. And yeah, if you want a contact for the vendor for that, I will happily provide that. I've got a one that's on my desk right now. So just reach out, and I'm willing to give those contacts to you.
Okay, perfect. So you don't need a water line and a vent. It's all electric.
No, you.
Oh, you do.
Water line and electric. Correct.
Okay, gotcha. All right. So let's get into the unit mix on this property and sort of where rents are today versus where you think you can take them.
Yeah. So, these rents that we've got right here are our current market rents. These are for our premium level finish out. And so what they did is essentially we taken all the units up to the premium market rent plus added just a market rate rent growth on top of that. And that's how we got to our pro forma rents. It takes you up to about $2 a square foot, which seems a little aggressive, but we're still at $12.24 all in pro forma rents. A significantly more value oriented option for renters than the new construction nearby. So if you want to live in this area, this is still the cheapest rent in the market by a significant margin.
Just roughly, what's a one bedroom at the Class A stuff?
Yeah, one bedroom at the Class A stuff is going to be right at about $1,400 per unit.
Okay, so you got probably a $300-$400 gap between Class A versus this one.
Yeah.
Okay, and then we have a couple of comps here, just sort of these are a little bit older comps, but I guess Monticello and Monticello Crossroads and Healing Park Place. Maybe talk about these comps. They're not right in that same pocket, but I guess you could walk to probably some retail in these areas. So talk about these comps and sort of why you chose them.
Yeah, so Monticello and Monticello Crossing are both on the same road. So they're both on White Settlement. They have a little bit higher median household income because they're a little bit closer into downtown. But these are really the only properties that are, upgraded to the level that Crest is in the area. So, like we talked about, all in the River District and surrounding Crest, there's new construction properties. You have to go, pretty hefty way out of the way to get to the nearest value add or 90s, 80s, 70s construction deals. And so we reached a little bit closer in, knowing that they're probably always, Monticello and Monticello Crossroads are probably always going to be a little bit of a premium compared to this unit. But they are some of the closest upgraded comps that we could find for the Crest.
And it's not like I mean, it's not like they have like 500 units and they're going to all of a sudden cut rent. I mean, it looks like those are pretty small properties too, right? So, I mean, it looks like they're going to be pretty full all the time.
Yes,
Yeah.
yes, and I know the owners of those properties. They're both doing really well. One of them is a little bit over 100 units, and the other one, so Monticello is a little bit over 100 units, and the other one's a little bit under 100 units.
Okay. All right. Perfect. So we talked about this when we're going through it, but maybe just go through sort of new owner. What do you think they can come in do to really drive the value up?
Yeah, yeah. So I think the biggest thing is going to be unit interiors and taking the units up to that premium level finish out. It's not going to be a relatively major cost. You're talking about $2,500 per unit, roughly, and you can get about $140 per month. So if you do that on the ones and twos, it's about 87,000 added to your annual income. And then on the other income side, the thought process is to continue the reserve parking, which the current owner has just rolled out, to get about $11,000 in additional annual income, and then add the washer dryer connections or washer dryers in the units for an additional premium of $50 per month.
Okay, so you do all that. You put it on a cap rate, you're about 2.5 million in value. What do you think? Sort of capex. The reserve parking doesn't cost that much, but what do you think capex to sort of finish out the interiors, do the washer dryers? How much capex do you think someone needs to set aside on this one?
Yeah, it's really not a whole lot. I mean, the roof's in
Okay.
really good shape. The parking lot's concrete. The exterior, like we talked about earlier, has been done. So I would probably budget around $3,500 per unit for this. It's not going to be a capital intensive project, but it is going to be a project where you're going to benefit from the area around you getting significantly better. And so I think it's a great deal for, a first time buyer, a great deal for someone who's in an exchange that wants to park cash and continue to cash flow in a really good submarket that's going to stay highly occupied.
All right. So let's jump into the financials here. Um, I guess going through it, any sort of on the pro forma, you have your sort of NOI from T3 going from about 323 up to about 475 by year two. What's some of the main drivers there? On the income side, maybe we'll take it first and then go to expenses.
Yeah, yeah. So, income we really didn't, push that much. I mean, really what we did here is take like we talked about, taking all those units up to the premium level rents and then push those a little bit more just to cover the organic rent growth in the submarket. So, if you look at my T1 income, because the property's starting to really hit its stride, you're at 856 total income. And we only raised it up to about 900,000. And then on the expense side, we kept things pretty flat, with the exception of taxes. We did a 75% tax adjustment for this property. They got hit pretty heftily last year. And so, we believe that to be a conservative number. I think you can pretty much run this like the current owner is. We didn't make too many huge changes or assumptions there. Just kind of put things in line with market.
So two questions. I guess I mean, have you talked to the management company who's currently on there? Are they good to sort of stay on for somebody if someone wants to retain them in terms of management?
Yeah, they'd
Yeah.
be open to it.
Yeah.
They're not necessarily the group that specializes in managing the size of deals. They're
Yeah.
typically a little bit larger. It's Valiant Residential,
Okay.
but there are 3 or 4 groups that I know would manage this deal very well and efficiently, and have done so on other properties. like Touchstone comes to mind. They're one that's managing a lot of deals around this size. And there's a handful of others that I could definitely point out if you're interested.
Okay. And everyone always gets a little bit nervous when it's called, like, the name has some sort of river or what body of water next to it. So insurance, we have sort of roughly 550 a door, but is it in, would you know what flood zone it's in, this property? Or if it's in a flood
No,
zone?
no flood
It's
zone.
not.
No
Okay.
flood
All
zone.
right. So it's
Yeah.
just an X. Okay.
Yeah, don't
All
worry
right.
about that. The river
Okay.
district is just the area that it's in. It's probably the farthest property away from the river within this submarket. So
Okay.
we're
Yeah.
good there.
Yeah. I grew up in Houston, so I'm used to flood zone stuff. So
Yeah.
here's sort of the overall year 1 to 10. Anything particular on this sort of year 1 through 5 pro forma going
No,
in?
I mean we were pretty, I think, conservative with this underwriting. What we did is we assume in the first 2 years you're going to be seeing that big rental pop from taking the units from classic or standard upgrade to premium. So that's really when you're going to get your big bump. And then we pushed up, market rents 4% for the submarket, which is below what it's performed at the last 3-4 years. And then we just kind of settled out 3% rent growth for the next 6 years after that. Nothing super special here. I mean, I think this deal is going to come down to somebody who likes the story, believes in the area, and doesn't want a big project, but wants something with some value add lift.
All right. And then you guys have been on the market for a little bit here, but what's the whisper on this deal right now on the pricing?
Yeah, we're whispering 7.5 million. We are about 2 weeks into our marketing. We were probably going to be on the market for another 3 weeks. We will have call for offer announcement here in the next couple of days to shoot out when that exact call for offer date will be. But 7.5 is the whisper.
Okay. So yeah, we looked at it a couple different ways on the debt side. Fannie and Freddie, they're going to be pretty dependent on 10-year treasury. So, let's say 10-year treasury is 4%. Their spread is typically about 200 basis points. So you're plus or minus 25 basis points on 6% right now. And they're going to be sizing based on in-place income. So the property is well occupied. I think, what was the occupancy again right now?
Right now they're at 93%.
93%. So it's well occupied right now. So pretty easily qualify for Fannie Mae. Fannie Mae's pricing on these smaller deals is a little bit better than Freddie Mac SBL right now. So right now we have Fannie Mae on the sheet. So you're probably 55, 60% leveraged on Fannie Mae right now. And then if you jump over to, maybe if you want a little bit more leverage, you could go up to non-recourse bridge and get maybe 65 to 70%. And then if you're comfortable signing recourse, you're probably same leverage, but your rate would probably be 625 to 7 fixed. We're seeing those probably about 3 to 5 years fixed. And then, you might get 1 to 2 years IO on those. So depending on just sort of what your strategy is, how long you plan on holding this deal, you have a couple good options here. And honestly, I mean, I think a lot of people are comfortable sort of with this loan amount, this amount of equity. It could be an individual buying the deal or just like a small tenant in common group coming in buying this deal. And it's an achievable raise nowadays versus, someone trying to go out and syndicate, a 30, 40, $50 million deal right now. So we don't have a call for offers date yet, but Rowan, I appreciate you coming on. Do you have any sort of in summary comments here on this deal?
Yeah, sure. I think we're seeing, like I said at the very beginning, a little bit of a flight to quality. This is an 80s construction deal, clean quality construction, individual systems. So it fits that box. And I think it's a great first deal for somebody. Good area, strong location. I think when you get out there and see the property, it's a little bit better than you think it would be on paper. So I'd encourage folks, if they want to come view the property, give me a call. We can get out there and take a look around and see some units. So just don't be afraid to reach out.
All right. Thanks a lot, Rowan, for coming on.
Thanks, James. Appreciate it.